It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast as we talk property news. We do that for you 7 days a week, as heard on iHeartRadio, Spotify, Apple Podcasts and Amazon. And the middle of the working week up to a Wednesday, the 19th day of June. And good morning to Rick in Lyons, which apparently, I didn't know, is a suburb of Darwin. And you emailed in to say that you are doing the reverse of what most people are doing when moving to Darwin for cheaper real estate. You say that you are off to Brisbane to be closer with your daughter and grandson because, as you say, you only have one life. So that is so true. Now, despite the tougher borrowing conditions, Australians are still buying and transacting on properties, and it's interesting to compare pre-pandemic to 2024, especially for first-home buyers. Now, some of the numbers this morning from Loan Market, their data shows that first-home buyers are 36.7% of owner-occupier purchases. Now, that is up 1.5% over the last 12 months. And compared to pre-pandemic in 2020, where first home buyers made up 31.8% of these purchases, that's almost a 5% increase, even with higher interest rates and rampant cost of living prices. So with that, this morning we're going to catch up for the first time with Sarah Thompson, the owner and director of Loan Market in Geelong. And welcome to you, Sarah, to the Real Estate Breakfast. You have been doing this a long time. I understand over 20 years. You would have seen a bit in that time.
Hi, Craig, and thanks for having me. I definitely have, over the last 20 years, seen many changes in, obviously, finance and real estate, but it's a great business to be in.
Now, those numbers are pretty interesting. Also, if you have a look at the average deposit, that has increased to 83,000 and change, up from 71k and change.
Yeah, it's a lot to save, isn't it, when you're paying rent or HECS fees or other bills, etc. So it's definitely increased by a fair bit.
And you've got one of the biggest female brokerages in Australia.
Yeah, we do actually. Surprisingly, we've got a huge amount of women that work for us, but we do actually have 2 boys now, which is lovely to have. So we're trying to even the scales a little bit. But a lot of women in this role, obviously dealing with finance and dealing with people's very big time in their life when they're purchasing property. It can be quite intimidating, and we just love to guide people through the process. So I don't know. We seem to attract women in our office, I think, more than anything.
There are so many different types of government schemes, something I want to talk to you about this morning. Where should somebody start if you don't know what you're eligible for when it comes to these schemes?
Yeah, it's a great question, Craig. I mean, you could go on Google, you could go and try and find information on there, but there are just so many. So we always say to people, reach out to your broker, have a chat with them about what possibly they could get access to. First home buyers, there's a first home guarantee that the government have. And there's quite a few different sort of types that are out there. So there's a first homeowner scheme, which is to buy a property established or do construction. There's a regional scheme. There's one for single parents. So they only need 2%. So 2% of the property value. So if the property value was $500, they're only needing basically $10,000 plus costs to get into that property. They've changed it recently, actually. It was always, it had to be a partner or a solo person, and the government's actually changed that recently. So if you want to buy with a friend or a mate or a sibling, the ability to do that now has increased. So that's also great. All states have different types of fees in relation to stamp duty and transfer fees. So it's generally state by state that those are decided. So it's a really good idea to get in contact with your broker so they'll be able to guide you through what you're actually capable of getting.
That's just one reason to get in touch with a mortgage broker, because that whole landscape is changing almost every 3, 4, 6, certainly every 12 months. There's something on the dial that is moving. And there's a little bit of a misconception around guarantors these days. Perhaps explain to those listeners what a guarantor is and the different types and what misconceptions are out there in the marketplace.
Yeah, absolutely. So if people aren't or can't get part of that first scheme spots that we were talking about, guarantors could be another option where we always talk about the children and the adults generally. That's the way it would work. But the children would use a parent, and it generally needs to be a parent, but a lot of banks are different. Some will take a sibling or an uncle or an auntie or a step parent. But basically with a guarantor, it's generally the children that are asking access to a parent's property. And we sort of describe it like they're grabbing a bedroom of the parent's home and holding on to that as security. So it's generally a limited amount. It's only limited to whatever the kids need to keep their property under 80%. So with that, the guarantors generally need to seek legal advice with most banks. Not all banks offer a guarantor loan though, so some specialise in it and are better than others. Really what happens is the kids' bank will grab a bedroom of the parents' property and hold that as security until the kids have enough equity in their home to actually release the parents' property. And I mean, through COVID, with the rise in property prices, we saw somebody being released from the guarantor obligation within about 4 or 5 months because the property had gone up so quickly. I think probably one of the misconceptions with guarantors is, you hear about probably from 30 years ago when it was parents may lose their homes or had lost their homes as going as a guarantor, but it's pretty detailed for somebody to go as a guarantor. And a lot of times, obviously, guarantors won't do it if they don't trust their kids to actually be able to pay down some debt or increase the value of the property as well with renovations.
Okay, so that is all really great information. We are talking to Sarah Thompson in Geelong this morning. When we come back, we're going to have a look at mortgage insurance. We'll do that next.
Every week, real estate transactions take place as the market shifts month by month. And every day, we keep you better informed and updated on the Real Estate Podcast.
So the RBA yesterday, as we all know, waking up this morning, they decided to stay in pause mode yesterday. And a lot of Aussies, of course, very thankful for that as we tuck into our serial this morning. Michelle Bullock fronted once again a press conference yesterday and was asked this question whether the board did think about raising the rates this month.
Yes, the board did discuss the case for increasing interest rates at this meeting. In the end, it decided that its current strategy of staying the course and trying to bring inflation back down by bringing supply back to demand. You can think about the national accounts in a couple of ways. One is that people are they're saving less to support their consumption because they're very confident about the future. The other way you can interpret it is that people are really hurting and they're not saving as much and they're really struggling to make ends meet. But the thing that's actually really quite positive is employment. While everyone is a little bit down in the dumps, I think it's also true that they've got jobs. Our forecasts see, with tax cuts coming, with inflation declining, that real income's going to start to rise again in the latter part of this year and into next year. And I think that will help people's confidence, that they'll actually see their real incomes rising. I think that'll be important.
And as part of the press conference yesterday, Michelle Bullock was asked this rather interesting and direct question.
And what do you say to the Australians who are thinking, what the hell are you doing? Why is nothing working? And when can you tell them that they can expect some relief?
So I can't tell them when they can expect some relief. What I can say to them is I am very conscious that the high interest rates are hurting particular sectors of the economy more than others. Interest rates are part of what's hurting them, but inflation is really hurting them. Consumers are feeling it when they go to the supermarkets. Again, I can't tell them when we will bring interest rates down, but I can say that my laser focus and the board's laser focus is on bringing inflation down, and that will help them. That will really help them.
Ready to step up your property knowledge? Access powerful insights with us.
And it is a Real Estate Wednesday. We are talking with Sarah there in Geelong, all about mortgages. Let's talk lenders' mortgage insurance. This is a big handbrake for a lot of people, Sarah, scraping up on their deposits. Let people know why they need it, and I guess, is it worth it?
Yeah, great question. So with lenders' mortgage insurance, it's actually a bank insurance and it covers the bank if the borrowers default on their mortgage and they cannot recoup the property or the price that is outstanding on the mortgage. If they can't recoup that back, then the lender's mortgage insurance will actually cover that to the bank. So really, it's a bank insurance for themselves. It doesn't cover a client for their own home loan. There's good and bad, obviously, with LMI, we call it. It's a necessary fee sometimes if you're borrowing over 80%. And sometimes it can be better paying lender's mortgage insurance now to get the property, sooner than having to save another $30,000. But by the time you do that, the property might have gone up by 100. If the mortgage insurance costs you $5,000, but you can get it now and not have to wait to save for further amount, and obviously the delay in time, I think it can sometimes be a really good option.
Yeah. And look, we should talk about why people go back and forth with the question about engaging a mortgage broker in the first place. And as I mentioned at the top when you were talking about the government schemes, there's a very good reason why. So when do you think is the best time to see a broker, and how important is it for people financing up their loan to do that through a broker?
Seeing a broker at the start of your journey can definitely help, because they're going to put you in the right stage from the very start of where you need to be in the education piece as well. Also, having access to over 60 different lenders, which we have at Loan Market, means that we can go to so many different banks to be able to assist a client and find the best deal for them. With lenders as well, as we were talking before about the government schemes, if you walk into particular branches, they actually may not even be part of that scheme or on the panel for that. So we can save people a lot of time and a lot of money. And you reach out to a broker at any time, refinancing, upgrading, downsizing, any of those.
Yeah, great. All right. Well, we'll leave it there, Sarah. Enjoy your Wednesday in Geelong. Look forward to catching you back in a couple of weeks' time.
Thanks, Craig.
Gain insights with exclusive conversations from real estate professionals about buying, selling and investing across Australia.
Have you found that there's a difference from the likes of a Coogee to where you are for those stronger local connections?
Yeah, I think we lived in Coogee for 5 years and we loved it. And we had a community based around our cafe. But when we came to Little Bay, we got a dog, and so we ended up, meeting so many more people than we ever did in Coogee in a very short space of time.
So you're the local tourism officer, are you, for Little Bay?
Yeah, it feels like that. My friends jokingly call me the mayor because I know lots of different people, and I'm not the mayor at all, but I love that aspect of Little Bay, that everyone kind of has a connection to each other and are very friendly.
We connect you to the best real estate information across Australia. The Real Estate Podcast.